the fact that there wasn't really much given when HSBC announced that it terminated its talks. A lot of journalists, of course, have in the meantime tried to get some information out of the big bank, and unfortunately no one has really made headway. What is your view on this? A lot of people are speculating that it really had to do with a change of management at the top. Others are saying perhaps they found some nasties coming through from its retail division.
Yeah, I think it was disappointing, Eleni, that there didn't come any sort of guidance from HSBC in terms of why they actually decided to terminate the deal. Like you said, it's basically either internal issue at HSBC or it's something that they might have found in Nedbank that scared them off the deal. What was interesting today, though, is the fact that Nedbank came out with their third quarter trading update. And what we saw in that is actually that the bad debt ratio for Nedbank actually decreased. Not by too much, but I think it went, if memory serves me correctly, it went to 1.36% compared to 1.52% in the third quarter of last year. So that almost speaks against any sort of nasties lurking in Nedbank's retail books, or any material nasty, should I say. The recovery is still a bit slower than one would have ideally have liked, but I think that's not something new. I think, it was public information beforehand that Nedbank did have some problems with their home loans book.
Well, Johann, what do you make of all the timing, especially when you look at when the HSBC talks were terminated, also the fact that the Reserve Bank said that they didn't actually have any formal announcement or any formal letter written to them, and then we heard that the talks terminated, and thereafter we've got the trading update by Nedbank, and the company says that headline earnings per share for the year is going to be 8% higher.
Yeah, it is actually interesting, but I think it's more a question of coincidence actually that it did come out that way. What was interesting also in the trading update was the fact that Nedbank did highlight that they did have an external risk consultant come in and evaluate their provisioning methodologies for bad debts. And according to that study, the provisioning methodologies were very much in line and, according to them, conservative. So, yeah, I think in terms of the timing issue, I think it's pretty much coincidence.
Kobie, what is your view? HSBC terminating talks. We've had the trading update through from Nedbank. Numbers not looking that bad. I mean, 8% increase in headline earnings per share for 2010.
Look, I think it's tough going on a date and then being dropped and you don't quite know why you got dropped, and nobody's giving you any reasons, and you're sitting on the phone and nobody's giving you reasons. But look, more seriously.
Great analogy, Kobie.
More seriously, I think firstly, there's nothing wrong with Netcore, okay? Bank governance in South Africa, I think, is of the highest in the world, okay? If you look at our banking institutions, especially the 4 large banks in this country, they're well regulated. There's nothing wrong with Netcore, and there's nothing wrong with any of the other banks. And I think, secondly, I'd like to say that it's just business as normal for Netcore. People made a huge issue about the fact that the prices now dropped back from 140 back to 137, now trading at about a 14 PE. It's just, it just focuses the business again on what's important, looking at the recovery, making sure that their book is in order and making sure that they take full use of the very low rates that we're seeing in this country, and making sure that they just position themselves for growth in the future. So I don't really read anything into this. What has surprised me, though, I must say, is how the very large banks, who only about 2 years ago was in very, very serious trouble, can come up with the capital and the cash to now look at emerging market growth. And it just shows you how big emerging market growth is for these large banks. They really want to take up positions else, and if it's not in South Africa, it would be elsewhere in the world.
Johann, what is your view on this? And looking at Nedbank as a core business at this point in time, do you think that Nedbank is going to do relatively well? Many are now asking the question, where to from here for Nedbank, and of course the possibilities of heading further into Africa. It seems that Standard Chartered is still rumoured to be interested in Nedbank. Your view?
Yeah, I think it's very much still business as usual. One actually needs to take a step back and ask yourself, what sort of impact would HSBC have had on Nedbank? And the core problem for Nedbank compared to the other big 4 banks in South Africa is its retail business. It's been loss-making now for the past 2 years. But I've got my doubts whether HSBC would really have had a material impact in terms of improving Nedbank's retail business. If we look at the impact that Barclays have had on Absa, it was very much on the investment banking side where it came through. The impact of ICBC on Standard Bank, we haven't really seen much of an impact coming through there yet. So I think it's really knuckling down, getting back to the basics, and business as usual for Nedbank. In terms of potential other foreign suitors, the only problem that with Standard Chartered is that they've recently did a rights issue. And in the prospectus of the rights issue, they made it very clear that the capital raised was to bolster capital, and they pertinently stated that it was not a war chest for acquisitions. So I think that's a problem that you're sitting with. HSBC is probably came out of the crisis amongst the best out of the big global banks. So, you know, if you start casting your eyes around for further potential suitors for South African banks, you know, it's Standard Chartered, and you probably need to look at some of the Spanish banks, maybe Santander, maybe BBVA. That's also got an emerging market mandate. The only problem with those two banks is I think they're very much focused on Latin American banks and Spanish-speaking banks.
What's interesting to note, Johann, is that HSBC said it's still very much interested in South African assets, and some people are talking about FirstRand as being a potential target. Your view?
Yeah, I think that might very well be the case, especially if you look at what FirstRand have done. They very much streamlined their business, you know, in the whole restructuring. They're looking to get rid of Momentum, merging that with Metropolitan. And even in terms of the ownership structure, you're starting to see a split in RMB, where you're going to have RMB banking and RMB insurance. You know, so that makes it a relatively nice entry point for any potential investor. You know, RMB Holdings owning about 33% of FirstRand, and if you throw in the 20% stake of Remgro in RMB, you know, so you get a nice entry point via RMB Remgro.
Okay, Kirby, looking at HSBC, looking at FirstRand, your view on this, and also the fact that Standard Chartered, as I mentioned, might be rumoured to be interested in Nedbank. As Johann mentioned, and correctly mentioned, rights issue recently, and in the prospectus, they talk about organic growth and the building up of capital, which basically rules out acquisitions.
Look, big Western banks, if you don't have emerging market exposure at this stage already, you're pretty much locked out of emerging market space. And I'm not talking about the emerging middle type income countries. I'm talking about emerging markets, so the ones that are up and running already. Now, look at South Africa as a classic example of that. You've got the four dominant banks that dominate in this country. If you want to enter this space, you're either going to do an acquisition. How else are you going to compete in this space? To put the footprint down here, it's just going to be too difficult, and you're probably not going to get the regulatory approval in order to do so. So I think emerging markets is just part of the flavour of the month. It's part of the flavour for trying to create some form of exposure so that you can create the earnings. So
HSBC needs to make a move very quickly then,
well, if you want to be in South Africa, yes. If you want to be in South Africa, there are some acquisitions that you could potentially look at, and there are some things that are potentially on the cards, and you have to go and do your due diligence and your homework, and you need to see what it is that you want to buy, if South Africa is the place that you want to be.
Johann, looking at the speculative price that was on the table at that point, 165 Rand a share for Nedbank. Do you think that was overdone? And also just looking, do you think that perhaps scared away the likes of HSBC? I mean, we're sitting at around 137 Rand 80 for Nedbank, and the stock was down 0.6% after the trading update was out.
Well, our own sort of fair value on Nedbank is about 150 Rand. But obviously, you know, there must be some sort of control premium if you want to acquire a controlling stake. So 160 should probably sound about right in terms of a takeout price for Nedbank. Having said that, I don't really believe the deal was scuppered on pricing issues. I think Old Mutual is very much a willing seller. I was actually concerned that minorities might be left in the cold, in the sense that Old Mutual wouldn't necessarily have driven too much on price. And I think, you know, I would also rule it out that the deal was scuppered on price, in terms of we didn't really see Old Mutual walking away from the deal. We actually saw HSBC walking away from the deal. If it was something to do with price, I think we would have heard about it.
Well, Johann, what are you advising investors right now? I mean, just looking at the banking space as a whole, would Nedbank be part of your portfolio? Is it part of your portfolio at 137 Rand 80? Would you be accumulating?
There's a bit of upside left. It's not necessarily a dripping roast, you know, and the problem is you're probably going to have to wait quite some time before you start seeing the benefits flow through. But having said that, banks is very much about decisions that you make today will have an impact 2-3 years down the line. And what was interesting out of the trading update from Nedbank today as well is the uptick that we saw in margins, and that was in an environment where we actually saw interest rates still coming down. So the uptick in margins was very much driven by an increase in asset pricing. So, I think the banks in this environment is writing pretty good business at decent margins, and much less risky business than they wrote, say, 2008, 2007. And I think the full benefit of that we'll only see 2-3 years down the line. But I don't think the share price is going to run away from you in a hurry, so you'll probably have time to get in. Nedbank specifically, probably not the most attractive of the banks. Having said that, the thing is with their bad debts, there's quite a bit of earnings momentum that can come through Nedbank if bad debts start to improve.